Well, I mean, I think that's just it. I mean, I think housing is actually priced to where it should be right now. I mean, 2 years ago, before the insanity at COVID happened, right? 3 years ago, you could go and buy a house and get some seller concessions. That all changed for basically 2 years. Now you're back to where you can get some concessions on a house. You know, even though stuff is more expensive, that could still save you 5 to 8 grand or more on coming out of pocket. And because the way it's set up, there's I think there's more opportunity. It's weird because, what I've seen is actually not that there's, the market's open back up again because rates are higher. So all of a sudden the $200,000 and $300,000 houses were basically non-existent here for a year in my market. Now they're back. There's not a lot of them and they're not great, but now there's opportunity to buy and fix up or get into something, and start out so that you can take that equity in 3 or 4 years and roll it into the next house. And that didn't exist for 2 years, as you know.
Welcome to the Uncensored Real Estate Podcast, where nothing is off limits. If you're interested in buying, selling, or investing in real estate, and you want to learn some of the insider secrets and uncensored truths from the true professionals in and around real estate, you've come to the right place. Now, let's buckle up for the uncensored truth about real estate and join your host, Brian Cardenas.
Everybody, welcome to the next episode of the Uncensored Real Estate Podcast. Thanks for joining us. And as the show is named, nothing is off limits. And so I think we brought a good person on today to venture into the nothing off limits territory. We brought on Jimmy Hobson, who is a branch manager in Utah for UMortgage. Jimmy, thank you very much for joining us today.
I'm happy to be here. Thanks, Brian.
And for those of you that are watching us on YouTube, please make sure that you go out and subscribe and hit that notification button. And if you're taking in an audio podcast, make sure you like us and give us a 5-star review so we can keep on doing this. And if you are watching us on YouTube, you're going to be disappointed that Jimmy is not in a suit and tie like he usually is 7 days a week. We got him in a hoodie. Very unusual for you, right, Jimmy?
Yeah, well, if they actually Googled me, they would find that there is no reality in a shirt and tie for me. Yeah, I have to polish myself up sometimes to get on shows.
Yeah. We'll take you as we can get you. I appreciate you joining us.
Of course.
So give us a little bit of background on you. Tell us kind of where you came from and how'd you get to where you're at?
Okay. So, my background's car business. I was in the car business for a long time and then sold insurance. And in 2016, at the young, ripe age of 42 years old, I thought there's got to be something different for me. So, I had a bunch of friends that were in different sales groups on Facebook, of all places, right? And I said, well, I'm thinking about becoming a lender. And one of my buddies is like, the average age of a lender in America is 53. I'm like, well, shit, I'm not 53. Why not? And so, because I'd been generating leads off Facebook for realtors and lenders, I realized, no offense to those who are listening here, but I realized 8.5, 9 out of 10 of them are morons. I thought I can do the job better than they can. My mom's been a realtor for 40 years, so I've known plenty of realtors in my life. And then started doing lending, and it turns out it's the perfect job for me. It makes sense financially. The math works in my head, and I'm just good at it. And so I went from nothing to, last year, I was top 1% Scotsman guide, did 100 million in production with 1.5 assistants, and so I've seen a ton of loans, and I just love it. I love helping people buy houses. Big focus on VA. I was about 40% VA last year. I'm about 55% this year. And do that. And obviously I'm a real estate investor. Now we sold a couple, but I own 13 or 14 doors with my partner. And so I got some commercial real estate, obviously residential. So I'm a big believer that this is the market that drives the economy. And so I'm going to put my money to work in it.
Yeah, and it's a changing market too. Like, what are you seeing in your market right now this year that's changed? I mean, even in the last 3 months. I mean, shit, it's such a dramatic change this year.
Well, we're probably not unlike you guys. I mean, obviously we're not a warm climate like Arizona, but 8 months ago, 7-8 months ago, we were 50,000 over list. Every offer getting 50 offers on a house. Then all of a sudden it's you get 3 offers and you're happy to pay concessions and a 2-1 buy down as a seller. It's like the different world. It's hard in my market because a lot of my borrowers are active duty military. So it's actually good for me now, even though the rates are terrible. It's opened up some pockets to some cheaper houses for people so that we can hopefully get them qualified if we can squeeze them in. We get enough seller money to buy the rate down permanently. but it's, yeah, the market. I mean, it's the whole West is very similar. Obviously, our economy is really good in Utah, so we got a lot of transitory folks, just like you guys out of California, and we got a kind of a tech hub south of Salt Lake, so that's good, and we're growing, and obviously we have a very fast growing population, and there's not enough houses, but people don't realize, Utah's got a total of 3 million people. There's more than that live in Maricopa County, so 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 we're kind of jammed in a small spot. But everyone's numbers are off. I mean, mine are good because the focus is purchase, but everyone's, there's fear in the market, obviously, because of what's going on. I mean, I can't blame them. Rates are as high as when I bought my first house, but I still think it's a good time to buy, because now you can get a house that's not $50,000 inflated. Now you can get it at the real cost.
Yeah. So what is it like when you're talking to consumers? What are the biggest fears that they have? Because that seems like what's prevailing in the media anyway is fear.
I mean, it's funny is it's not, the media is obviously terrible. I mean, I believe, and I wasn't in this industry back in 08, 09, 2010, but I do believe that about 40% of what happened back then was all media hysteria, like Chicken Little, the sky is falling crap, because human nature is, oh, my neighbors are not paying their bills, why should I, kind of thing, right? I think the fear I see today is everyone's like, well, everything's gone up. What's going to happen? We've got an election coming. All of a sudden gas is more expensive. Everything's more expensive. And then the rates. People are afraid of the rates. It's weird because they'll go and drop $100,000 on a car they shouldn't buy, but then second guess paying $400 more on a mortgage, right? So it's all relative in that thing. I think it's really, it's just that the payment's that much higher. And so that's the biggest thing. I think there's truly more propaganda out there than real fear, but because of all that propaganda, a lot of people aren't even looking to buy a house now. That's the issue.
Yeah, I think, I've always said this, that I feel like it's about a 3-month period of time where there's an emotional overreaction. I mean, we see it in the stock market, Wall Street, like you get wild swings on emotional overreactions to things. It doesn't usually stretch for 3 months, but I feel like in real estate and mortgage, it's like a 3-month period. Like when there's an initial shock that happens, oh my God, the rates went up, or inflation was really high, the Fed increased rates, you start to see a reaction really quickly, like kind of an irrational reaction. And then it causes people to just like freeze in place for a little while. And then after a month, after 2, it's kind of like, oh, well, maybe this is the shit that we got to deal with going forward. Okay, let's get back to life. And then things start, getting back to
it's funny you say that, because I think that was May, June, and July. And then the rates dipped for a minute in August, and it opened back up. And September was like my second best month of the year, because all of a sudden rates were enough lower that people were okay. And then all of a sudden they shot back up again. And so everyone's like, ooh, brakes on, right? If you're going to buy a house then and buy a house now, it's all relative. I mean, the reality of America is, and the experts predict, and I'm not an expert, but they say the rates are eventually going to go down. What that looks like, we don't know. But we are going to election cycle. So I'm a believer that elections kind of drive the way the economy goes and the housing goes. Let's prove it in the past, but it's weird because, but I think you're right. I think we're a month or two if the rates actually stabilize, and they've been volatile last month, but if they actually stabilize, I think it'll open back up again. Even if it's at a rate people don't like, they're at least used to it at that point.
So the last couple of years, it's been really, really hard for first-time home buyers to buy a house. Like you got to be loaded with cash. You got to be willing to pay over list. You got to be doing these appraisal contingency waivers, appraisal gap, all that kind of stuff was going on.
Oh yeah. Crazy.
Now, none of that shit is going on right now.
Yeah.
So what, we're dealing with higher prices. We're dealing with higher interest rates. What's the opportunities that are out there for people that don't want to listen to all the fear porn that's going on?
Well, I mean, I think that's just it. I mean, I think housing is actually priced to where it should be right now. 2 years ago, before the insanity at COVID happened, right? 2-3 years ago, you could go and buy a house and get some seller concessions. That all changed for basically 2 years. Now you're back to where you can get some concessions on a house. Even though stuff's is more expensive, that can still save you $5,000 to $8,000 or more on coming out of pocket. And because the way it's set up, there's just I think there's more opportunity. It's weird because what I've seen is actually not that there's, the market's open back up again because rates are higher. So all of a sudden the $200,000 and $300,000 houses were basically non-existent here for a year in my market. Now they're back. There's not a lot of them and they're not great, but now there's opportunity to buy and fix up or get into something, and start out so that you can take that equity in 3 or 4 years and roll it into the next house. And that didn't exist for 2 years, as you know. So,
yeah, I think that's the thing that people got to keep in mind with all this is you've basically not wiped out, but you've pushed a bunch of people to the sidelines because they're afraid or whatever. They're waiting for something to happen. They're waiting for prices to come down. They're waiting for interest rates to come down. And the opportunity that was lost on so many people, first-time home buyers primarily, but even people just having to use an FHA or a VA loan. Like we had veterans getting screwed out of being able to get into a house because they wanted to use a VA loan, and there's so much lack of understanding about a VA loan and what the risks are, so to speak, for a seller. Now they can go and get in there, and get some concessions and things like that. So I think that's where people got to like really start talking to people that are involved in the industry and understand where's that opportunity like. Because like you said, you can get concessions to help buy the rate down. You can get a lower price on a property. But as soon as things normalize and if rates do come down like everyone's anticipating, everybody's coming back into the market. Competition's going to go. Prices are going to go. And now you just missed out on that golden window.
I mean, and that's really that's exactly the truth is the golden window. That's what I tell people all the time. I was like, man, rates may suck right now. I was like, but this is your opportunity that you didn't have. I mean, for perspective, for people watching, I did 94 VA loans last year, and I probably could have done another 20 or 30 if people had been realistic about accepting offers and actually considering a VA offer. It was just non-existent. If they didn't have the money to pay over, it was unlikely to happen. And so that's good for them. It's really good for any buyers. My nephew right now is buying a house. And the rate sucks for him, because he was like, well, because we started talking like 2 months ago and he couldn't afford it. And it was like in the 5s. And now it's like 699, and he's like, what do I do? I'm like, dude, I was like, trust me, I got you. You're my nephew. I've been with you 23 years now, buddy. We're going to take care of you. It's just a matter of, it's an FHA. So we'll just do a streamlined refi if the rates dip or whatever that looks like, or if he gets a score up, we'll fix it. But as I said, you need to buy this house now. You're buying in a good area. You want to have a school for your child. Figure this out, because rent's going to keep going up, and rents here. I mean, imagine down in Phoenix, rents here are terrible.
Yeah.
I mean, you're 2-bedroom, 1 bath. You're like $1,700. Yep. And that's in an area of town I wouldn't live in.
Yeah.
So that's the biggest thing is, as much as people may love or not love the market, and frankly, rates don't suck, but they relative to what people were used to a year ago, they do, right? In the grand scheme of things. I mean, to me, I'm still buying properties. If it makes sense, do it. And that's one of my videos I did. It's like, if it makes sense to you and you can afford this, you should consider it, because now is the time to buy a house. Better than any time in the last 2 years. Now is the time if you can get in.
Yeah, I think sometimes people get focused on, what is the rate today? And they think, oh my God, it sucked. It's terrible.
Yeah.
But it's like, what are you comparing that to? Okay, you're comparing it to the lowest rates ever in the history of mankind.
Yeah.
That was spurred on by a one-of-a-kind pandemic that we've never seen before. And so like that was your normal, and now you think this sucks? Like you gotta pull your head out a little bit and realize, okay, your frame of reference is off a little bit. Like if you compare it to a 5% rate, which is, kind of normal for the last decade. Yep. Okay. Yeah. It's a little high. It's not that bad compared to a 5% rate. It's bad. It's awful compared to a 2.5% rate, but don't expect 2.5 or 3 to come back. That's not what we're going to be heading back to in all likelihood. Well, so yeah, exactly. If you can afford it, like you said, that's the key is like, stop basing your decision on how you view things today relative to the last 2 years. Base it on, can you afford it? Is it a good, fair price for the property? And does it make sense? Does it fill your needs? If it hits those 3, do it.
Exactly. That's the key. If you're not stretching yourself thin, if you can afford it, if you're going to be there long enough term to make it make sense, absolutely do it. I mean, that's the problem is we saw a lot in the last 2 years. People were buying out of desperation because they thought they were going to miss out, and frankly, they're probably in a decent position that they did that, but it wasn't the smartest choice when they chose it. Right. I mean, in hindsight, great choice. Right. But as long as they didn't pay 75 grand over, but I mean, I literally had people pay 80 grand, 100 grand over. I'm like, this is madness. I was going to do a new build last year, and I'm bidding on, I mean, this is going to sound terrible, but I'm bidding on like $1.5 million house. Right. And there were people offering 100, 200 grand over. I'm like, you're out of your minds. I was like, I know better. And thank goodness I didn't do it, because now rates are where they're at on, on a jumbo, but it's just like, the craziness that people were doing. I'm like, what are you guys doing? Right. I mean, people that shouldn't have been buying houses. Now, again, back to the whole mantra, if you can afford it and it makes sense, do it, period. Because real estate is the one thing that no matter what has ever happened is always appreciated historically.
Right.
You'll
have little dips here and there, like we had
Yep.
with the crash back in 2008. But if you look at the graph of where the prices have gone, yeah, you see that little like heart attack in there. But other than that, that line keeps going up, so you're in good shape if you own real estate.
Exactly.
I'm going to go back to something you said before. 94 VA loans last year in that kind of a market where no one wanted to accept a VA loan.
Yeah.
How in the hell did you do that?
Man, I have, so I went to training called Military Mortgage Boot Camp back in April of 2018. Now they are called Veteran Mortgage Advisor. You may be familiar with those guys. And then I started doing VETA VA. And I just really decided in 18 that I really wanted to focus on VA. So I started building it out. I started really learning in my craft and studying and doing it. And frankly, I just put myself in a position where I was working with the best realtors in the market to do VA loans. And really I've kind of one of my realtors calls it like a cult-like following. I've created something that people know if there's a tricky VA question, regardless if I'm doing the loan or not, they can call me. And so that's power. You know what I mean?
Yeah.
And so that's how, and then I just, in my veterans, once you take care of veterans, they will tell everybody. And so I just built it that way and just kept doing it. And they kept finding me and I kept closing them. And I had super solid realtors. I can't give a shout out enough because, traditionally I believe my job is significantly harder than a realtor's, but the last 2 years have been hell. You couldn't pay me enough to go show houses, and write 50 offers. I mean, my gosh. Right. And so, but that's really it. I mean, it's just been my focus and my passion. And so I know the stuff inside and out. They call me, like I got a call yesterday. You'll appreciate this. I got a call yesterday and the veteran's like, well, I'm ETSing. I'm leaving the service in April of next year. I'm like, I can't use any of your income. He's like, well, I had the last 2 lenders tell me I could. I'm like, you can't unless you commit loan fraud. So let me tell you what you can do to make it work. Right. But they're like, oh, you're fine and we can make it work. I'm like, no, you can't. The rules are the rules. It's right in the VA guidelines. Yeah. But the problem is people are so desperate. They're going to tell him whatever he wants to hear and then shift gears on him when he's so far into the ether. Oh, by the way, we got to do conventional, after they realize he's got some money in the bank and they can kind of pigeonhole him. That's not how you and I do loans.
No.
The way I do loans is I'm going to give you all the facts up front. If that's not congruent with the way you believe, that's your prerogative. But I know the reality and I'll turn loans away if it doesn't make any sense. My philosophy has always been, I'll tell people, I was like, you probably shouldn't buy a house. Now I'm going to do your loan because you want to buy a house because I know I'm going to take better care of you than anybody else, but you probably still shouldn't buy, and that's
Tell them what they don't want to hear. That's a good one.
Yeah, well, exactly. I mean, people just, it's funny as they, not everybody should buy a house. I'm a big believer that everyone should own a house, but now's not the time. Like if you're trying to fix a marriage, you don't have a baby, you don't buy a house. I mean, it's very simple, right? And I posted that multiple times. I'm like, if you're not ready, if you don't have money in the bank, if one broken water heater bankrupts you, you shouldn't buy a house.
Yeah. It's not for everybody. I mean, it's a good investment, yes, but it's not the right investment for everybody at a particular time. I think that's
exactly
important. So, just getting that many offers accepted, like what were you guys doing strategy wise to be able to overcome all the misconceptions that are out there? Or maybe let's start with this, because I think sometimes people don't understand what the misconceptions are.
Sure.
Tell us what some of the misconceptions are about a VA financed offer.
I mean, the biggest one's the appraisal, obviously. They think that VA appraisals are always low and they've had terrible experiences. They've done one VA transaction in 20 years. And because they're the greatest realtor of all time, they think that that's the reality of things, right? When frankly, it's not. So that's it. They put a stat out last year and you probably saw it, on average, 92% of conventional appraisals come back at value, 91.7 at VA. Yeah. So there you go. Plus, VA is the only one that has two different options to achieve value. So if the lender doesn't feel, or sorry, the appraiser doesn't feel like they can get value, they can invoke Tidewater. You can provide them comps, and they either give you value or don't. If that doesn't work, then you can go right above their head to the VA and try it again. So that's a huge advantage. I mean, we can dispute conventional appraisals, we can dispute FHA appraisals, but they don't have built-in platforms where the appraiser has to do it. They can basically give you the middle finger on those two, and you never have a leg to stand on. So that's the biggest thing.
That's one big important point, just to not interrupt you too much, but for the consumer to understand and realtors listening to understand, when you have a low appraisal on conventional FHA and you go to do a reconsideration of value, you are going back to the person that did the appraisal and saying, hey, we think you screwed up. We think we know your job better than you do. Here, increase this value for us, would you, please?
Yeah.
And it's rare that it ever happens. And what the process with the VA is different. You can go to the VA. You have a second set of eyes to look at this and make a determination if a higher value is
and not only that, but the initial one, so the VA appraiser is a different animal. Now, mind you, every VA appraiser I've ever dealt with does conventional appraisals, right? But the VA has very clear guidelines, and probably all but one or two VA appraisers, like if they invoke Tidewater and you provide them comps, they're happy for that because maybe they don't see it or maybe they missed something. I had one come back, invoke Tidewater, it came back 80 grand above value because there were comps that he had missed. I'm like, holy crap, right? Because I literally called him. I'm like, bro, what's going on here? He's like, no, that's right. I was like, there's new comps supported that value. I'm like, wow, right? And that never happens. You know that as well as I do, right? But they're at least humble enough to take that. Now, obviously, if that path doesn't work, then you go above their head and go to the VA and try to solve it that way. But that's the beautiful thing about that is the VA at least gives opportunity. Now, there are some talks where the VA is going to try to streamline their appraisal process and bring it more in line with the conventional appraisal process, which really just solidifies the greatest process there is anyway, because you already have two levels of being able to dispute an appraisal. But if they go to the basis of way a conventional appraisal is done, it's going to change the game. I would love to see, frankly, appraisal waivers on VA, but I don't know if that's ever going to happen. So
I don't know about that.
I mean, who knows? But again, that was always the fear. And that's what I heard forever and ever. But in the last 2 years, I've seen more low conventional appraisals than VA. So that's the first thing I hear all the time. The second thing is, sellers got to pay for all this stuff. No, they don't. When in Utah, we have the FHA VA addendum where they spell out very clearly how much they're going to contribute to VA repairs, right? Now, most people know up front, just like FHA, you're going to have peeling paint, you're going to have outlet covers, exposed wiring, so on and so forth, right? But the seller doesn't have to fix those things. That's still their prerogative. They can back out of the deal if they want, right. or the veteran can opt to pay that. So people believe the veteran can't pay for that. Number one, that's not true. If there's termites, the veteran can pay for it. If there's repairs, the veteran can pay for that. If they really want that house and the seller doesn't have any money or doesn't want to do it, they don't have to. That's their prerogative. So those are the biggest misnomers. Like, well, my seller had to pay for this and that. Bullshit. That is not accurate. That means you got morons running these real estate companies, telling people that that's reality. When frankly, if you actually talk to an underwriter that knows what they're doing, they'll be able to tell you.
Now, I don't remember when it was, but and maybe you do. I think some of the agents that have been around forever, rarely do VA, and they come across the VA, and I'll still get these calls from a listing agent. How much does my seller have to pay on this?
Exactly.
Yeah. And it used to be that way. Yeah, sellers had to come in and pay for X amount, but it hasn't been that way. Do you remember when that changed? I don't remember.
It's before my time.
Yeah, it's been a long time.
Yeah, I mean, but that's the misnomer. The Karens and Barrys of the world that have been doing this for 25 years and know better. That's running into. And frankly, experience is great if you actually learn to build on that experience, right? But the old days, I mean, people tell you, well, it's a good thing it's changed. I'm like, it's been changed for a long time. For the entire 6.5 years I've done this job, it's been changed. Yeah. But people are relying on old stuff. Like, I had a guy try to argue with me about the VA limits. I'm like, they have full entitlement. There is no limit. Well, the county says this. I'm like, bro, I do this for a living. I was like, I promise you, I know what I'm doing. And mind you, 2-3 years ago, that was they were capped at the conforming limit, right? No more though. So, the Blue Water Act, signed in by President Trump changed the game for VA, which is amazing.
Yeah. Well, tell everybody what that is.
So when the law passed, basically a veteran with full entitlement can buy as much house as the bank will lend on. So if you can find a lender to finance a $10 million property, you can finance 100% of 10 million. Now, mind you, I don't know anybody that goes that high, but we've got lenders that go, I think, to 3 and maybe 4 or 5, but for 3 for sure. I mean, I've done multiple 100% financing VA loans in the 1, 2, 1, 3 range.
You want to buy a house, but high interest rates have got you down? Take the rate challenge and send us a verifiable loan estimate from another lender, and we'll beat it and pay for your appraisal up to $600. Here at Give Mortgage, being powered by UMortgage allows us to provide you with unmatched speed and efficiency and the best rates and fees in the market, all while delivering you the concierge level service you deserve. We want you to have an experience getting a mortgage that you'll never forget, and not because you got put through a meat grinder to get it. At Give Mortgage, we give great advice, we give the best rates, and we give back to charity. Visit us at www.give-mortgage.com or call us at 480-331-4684 to schedule a free consultation to see how we can help.
One of the other things that I hear sometimes is that the borrower is not as strong because they don't have any money to put down. Talk about that.
Well, so I teach a class, and my buddy Leroy, who we saw earlier today, teaches a class as well. But the average VA borrower, across the country is, low, especially in Utah, my market's low 700 credit score, $18,000, $20,000 in the bank. And obviously they got a job that's never going to, if they're active duty, especially, they're getting housing paid for, they have plenty of income, right? So, and actually, despite what some politicians say, they're actually a higher educated class than most Americans as well, per capita on average. So they are super solid borrowers. I would say my average VA borrower the last 2 years has been in the low 7s credit score. So, and I've got a lot of guys and gals that are out of the military. They've got a retirement, and then they're working for some defense contractor making 3 times what they made in the military. So they retire, full pension, they get a disability rating for the military, and then they get a job, making $200,000 a year.
Yeah. Well, and the whole, they're not putting anything down thing is kind of ridiculous because when you look at the actual borrower, and sometimes we had to do that when it was super competitive and we're trying to convince everybody this is a really good borrower. You can show proof of funds that they've got assets there, but it's a little less valid of an argument today with rates where they're at. But the easiest thing is tell them, listen, if my client can borrow money at 4%, 5%, 6%, whatever, and not put it into this mortgage and this home purchase, why would they not do that when in a normal market, they can keep their money invested somewhere making higher than what it's costing to borrow? It makes no sense to put a bunch of extra money down. So you don't have a stronger borrower just because they're going conventional. You got a stronger borrower with the VA. Well,
exactly. And frankly, for a lender, the VA is a better loan anyway, because the VA guarantees 25%. So if they default, lender's protected. That's my whole argument to the lenders. Like, why don't you do 580 credit scores? Because the VA has no credit score limit. I'm like, why don't you do lower credit score manual underwrites? Well, our credit box this. I'm like, credit box my ass. I'm like, you're guaranteed protection.
Yeah.
I was like, Ginnie Mae guarantees protection on this thing. I was like, but I'm obviously, not the guys that, make hundreds of millions of dollars a year running a lender. So what do I know? But that's the whole point is, the loan outperforms every single loan on the market. It has a lower default rate than even conventional.
Yeah, that's the thing that people don't know about.
Yeah, and that's the biggest thing is conventional is a great loan. Conventional is still, 65% of the market or more, whatever it is, right?
Yeah.
And VA is a much smaller percentage than even FHA at that point. But the default rate is lower than conventional, significantly lower than FHA and USDA.
Yeah, and that's, the consumer doesn't know that. The sellers don't know that. The agents don't even know that. And I think it's really incumbent upon us to educate everybody about that. And that's, part of why I wanted to have you on today is, talk about these things, because there's a lot of misunderstandings out there about it.
Sure.
And I think we need to get rid of that stigma because, you've got solid borrowers that aren't going to back out. And, it even puts veterans in a good spot in a crazy market like this, where we don't know what's going to happen 6 months, a year from now. Yep. And a common thing that everybody's afraid about is the housing market going to crash? Let me first ask you, what's your feeling about what's going on in the housing market? Do we have a bubble? Do we have a crash coming? What's your opinion?
Well, so obviously I was not in this market in the late 2000s, so I can't really gauge it off of that. But, I do know from my friends that have been in the business longer than I have that I mean, stated income loans, option arms, things that just didn't 125% financing, whatever it looked like. None of that exists. It's harder to get a loan today than it ever has been. So borrowers that get houses today are actually better qualified than they ever have been in history, from what I understand, right? Now, with that being harder, maybe the markets were a tiny bit inflated because you had to pay over to win an offer. But I'm in probably the second best economy in the country, and housing's dipped a little bit, but it's not, housing itself has not dipped a ton. What's happened is there's 3-4 times as many houses on the market now, so that's put pressure on the others to actually have a real price, right? So I don't think so, because people are still going to buy. I know the hedge funds are still in theory buying, God forbid. People always need to have a place to live because kids are aging out, millennials are buying, Gen Z's at the age where they can start buying now. So it's a crazy market. If rates continue to go up, it could cause a little more issue, I think. But if we can get some stability somewhere near where we're at, obviously we've got an election coming in 2 weeks. That's going to probably make some changes. But do I think we're in a bubble? No. Would I buy houses today? Yes, if it made sense. That's me,
Yeah. And I think one of the biggest differences that a lot of people don't realize is just the supply of homes and the number of people that need to buy a home based on household formations is so dramatically different now than it was in 2008. Builders were overbuilding, and they continued overbuilding for a couple of years after the number of household formations started to decline, which is when people go get married, move out of their parents' house, have kids, need to go get the place of their own. That started declining. Builders were still building more and more each year. So they built the most houses in history back in 2008, while the demand for it was already declining. And then, like you said, all these people who really shouldn't have gotten a loan got loans, and all of a sudden the whole house of cards came tumbling down. Today, we're still way undersupply. Yeah, we have more than we did at the beginning of the year, but even at current levels, it's still below what the normal housing supply is in just about every market. And we've got 14 million more household formations now than we did in 2008.
Well, exactly. I mean, and the reality is outside of people being scared of the rates, if rates adjust to where, a little more normalcy, it's over. And we're going to be right back in that same market we were in for the last 2 years. I mean, if rates dip at all, in the next year, you better hope you're ahead of the game is all I can say.
Yeah, I mean, that's it. I mean, you hit the nail on the head. It's rates is the only thing that has slowed demand right now. People are just afraid, so they're sitting on the sidelines. As soon as they come down, which, like, part of the reason they're so high is because everybody's anticipating them coming down in the near term. So investors don't want to buy these things. They're going to get paid off in 6 months or a year or 18 months or whatever.
Oh, yeah.
So it's just it's a cycle that's causing itself to slow down by interest rates being high. They're going to come down. It's going to get better. So, but it's a legitimate thing that people have a concern about. I don't think it's going to happen, but you can't convince somebody necessarily that has that fear. So one of the things that I've talked about a lot, and I'm sure you're probably doing it too, maybe you can touch on it for our audience, is if you're really concerned about it and you're in the price range, specifically with FHA, what's the advantage of being in an FHA loan or a VA loan if rates come down in 6 months or a year, and let's say home values came down 5 or 10%?
Got it. Yeah, that's the best thing about both of those is you can do streamline refis that are not value based. I mean, both FHA and frankly VA. Because a conventional refi obviously is based on value. If you don't have value, you're not refinancing the house.
Right.
An FHA refi, you can do a streamline. You get a refund on some of that mortgage insurance, everything else. VA's got the IRRRL, which is the easiest loan there is. Literally 210 days from your first payment. If you made your payments on time, you can save it. You can lower your rate at least 0.5%. You can do it. Now, to me, 0.5% doesn't make sense, but 1% does all day long on a $400,000 house. So that's the beautiful thing about those two versions of Streamline that you just don't have in conventional. I wish conventional had that option. It would actually make a ton of sense, but I understand why it doesn't, because they don't have government protections per se. So,
they came out with those after the last crash and the HARP ones, and basically.
Yeah, exactly. Well, yeah, exactly. The HARPs and different things. Yeah.
Who knows? They could reintroduce that. But I think that's the thing that people need to realize is, even somebody that can qualify for a conventional, maybe they got high credit scores, they'd be a little bit better off on their payment on a conventional, but they're in that price range where they can do FHA. Like, we're going to lay out both of those options in front of them and counsel them on, okay, let's think past, you getting into this house. let's think half a year, 2 years from now, what potential things could happen, may or may not be likely, but you want to be in the spot where you can take advantage of a rate decline. So I think that's one thing that should mitigate some people's fears about what if home prices do go down, even if it's 5%, or 10%, which I think is possible. That could happen.
Sure.
But you don't want to be stuck in a loan that you can't take advantage of a 5 or a 4% rate if that happened to come around because the house value went down, you didn't have enough equity.
No, well, exactly. I mean, and it's funny is a lot of the guys that work with me, they came from a conventional shop. So they did everything in their power the last 2 years to get that score up to make it make sense conventional. Whereas I'm a guy like, look, I'm going to lay your options in front of you. We're going to educate you on what makes sense, and you're going to let you decide, right? FHA certainly has its place. I mean, especially with those protections. I mean, an FHA Streamline is the second easiest loan to do behind a VA IRRRL. I mean, it's literally you save money. It makes sense. As long as you have a net tangible benefit, you're off to the races. And people just don't understand. I mean, I had a prime example. I had one person that I did a DPA on. This has been 4 years ago. A down payment says the rate was not great. And literally, I have refinanced that same borrower as their house appreciated. I went a streamline because they reached out to me twice. And then I finally did a refi where I did cash out conventional, got rid of mortgage insurance, got them a little cash, paid everything off. They're in the same house that appreciated 150 grand since 4 years ago, or 200 grand, whatever the number was. And they had the ability to finally get out of that. But what it did is it allowed them to lower the burden so they could pay other bills off in the meantime, which is huge. You can save $300 or $400 a month on a payment. That's massive unless you go buy a car with it, obviously.
Yeah. So a couple of things I want to ask you about with respect to VA loans.
Okay.
One of the things that I've seen coming about a little bit in conversation, and applies with FHA as well, is assumptions.
Okay.
So let's talk a little bit about assumptions, because one of the things that people who did have an FHA loan or a VA loan and got a 3% interest rate, and now they're looking to go sell, but they're having a tough time selling their property. What can they look at in terms of an assumption that might help them?
Yeah. So, I mean, obviously I have not actually, I mean, I've been called a bunch about this. So the concern about an assumption is, I haven't called them about FHA, but I know on VA, the servicer will tell you 3 to 6 months. The servicer has no reason to do this. They already have a loan at 2.5%. They don't care who pays it as long as it's being paid, right? No reason to do it. Now, in the VA instance, if a VA loan is assumed by a non-veteran, which people don't believe that can happen, it can. Anybody can assume a VA loan if they qualify, if the servicer will allow them. But if it's assumed by a non-veteran, the veteran's entitlement is still tied to that house for as long as that loan exists. So as you're a veteran, do not do that, period. I can't explain enough. Unless you're desperate, don't do it, right? But like right now, I've got someone looking at Carrington, and they've been told by Carrington 3 to 6 months. Carrington doesn't even care. Why? I mean, they don't care. And I would assume FHA is the same thing. It's great that you can assume it at 2.5%, but what if it takes 4 months or 5 months, and then do you have the money to cover the difference in equity for the seller as well? Because outside of having the money in equity, I guess you could get a HELOC, and some services will allow it, some won't, but it's not all it's cracked up to be, and while I agree it's a great option, and and that was a much bigger deal in the 80s, is my understanding, as rates started to drop or go up and down. They did that a lot. I personally, if it made sense, I would look at it, but 3 to 6 months is a long time to wait to see if you qualify, in my opinion. Great options, but again, who knows if it's ever going to happen. I mean, most of these servicers, and a lot of them, once your lender has it and they sell it to a Carrington or a Lakeview, which I don't know if they still service or not, or a Mr. Cooper, those servicers don't give a crap about helping you. They couldn't give two shits. They already got a loan that's paying them at 3%. Why do they need somebody else to do it?
There's no money in it.
None. There's no benefit to them whatsoever. You're costing them money to assume a loan. They don't care.
Yeah. One other thing I want to ask about that is kind of a pet peeve, I'm sure, of yours and a lot of other people, is, so when a veteran is looking at trying to get financing for a home purchase, there's a few companies out there that have veterans and all this kind of stuff in their name, and they're supposed to be out there looking out for the veteran. What is the downside of those kind of companies versus working with somebody like you?
Well, I mean, so I'm a mortgage broker. So that means I'm direct to the lender. So traditionally, we're going to have lower rates and fees. So one of the big national lending groups who's all over the internet is actually Mortgage Research Center. They just branded themselves as Veterans United so that they can essentially prey on veterans. They do a ton of VA loans, but on average, as you probably can attest to if you've seen it, on average, I'm a half a point to 1% lower in rate and probably $2 to $3 grand in fees every single time.
Right.
They're just not good. They're a bank and they don't care and they don't shop. Whereas a broker, myself, can look at 6 or 7 different lenders and decide which path to go. So that's the first thing. The second thing is obviously is you're not dealing with someone in a call center. So if you ever Google these big banks that are lenders, your Wells Fargo's of the world, you're going to see that literally they've been fined for taking advantage of veterans. Yep. Massive, like hundreds of millions of dollars. And then you've got your big players like your USAAs of the world who, United States Automobile Association explained to me how that's tied to the military. I'll wait. Right. and then even Navy Fed. Navy Fed's probably the least of all the evils in the grand scheme of things. But these are big lenders that are in front of the veteran all the time at every single event on base and everything else. I just tell people, get a second opinion. When you're dealing with someone in a call center, they're literally getting paid a salary or hourly to push this loan through. For example, the largest lender in America, they get paid whether you close a loan or not at Rocket. They just push it down the pike and get paid, right? How does that benefit you as a borrower? It doesn't. You need someone that gives a shit if you, like, for example, Brian and I do loans. If I don't close a loan and do a good job for you, number one, I'm never getting paid. I don't get paid a nickel unless you close. Number two, we don't get paid on the rate. We get paid, we don't get, the interest rate can go up and down. So if the rate's 7% today, we're not getting paid on that. We get paid on the loan amount. It's a percentage of the loan amount. So, we're motivated to get you the best deal possible. If lender A has a 5% rate and lender B 6, if we can get you 5 because you qualify for it, you're going to get 5, right? We're not going to try to gouge you and make that extra money and stick it in the bank. That's just not how it works. And so that's really, we have a little more accountability on the broker side. And then frankly, I think most of us are in your local community. Now, mind you, we as a company are licensed in 45 states, but I myself have 5 licenses. I've done loans in Utah. I've done loans in Wyoming. And I've got license, and I've done loans in Texas because I've got licenses for my team. But to me, if it's in Texas, I don't know the Texas market well enough. I'm only there to manage people. So a Texas VA loan, I'm going to give to one of my VA guys down there because it's their market. They know it, right? I don't need to be involved in that loan because I don't live in San Antonio. I don't go to the events at the base. I don't know those guys. Utah's my home. It's where I do loans. Wyoming doesn't really have anybody, so that's why I have Wyoming and do VA loans there because it's kind of my wheelhouse there. But really the biggest thing is if you read enough of these reviews, you'll see. Now, you're going to see plenty of reviews that said, oh, it was a great experience. You want to know why it's a great experience? Because the borrowers don't know any better and customer service is fucking dead.
They just got closed. That's the great experience is they actually got the house. They got the loan.
Yeah.
That's all they know.
If you knew how terrible that experience was to get that house, like my favorite thing, and you'll appreciate this, Brian, you hear it all the time, is like, man, how come the last guy that I bought a home, when we got a home last time, we didn't do this? Because they didn't do it correctly. We do it right. We ask for more documents up front to make sure that as we get there, there's no bumps at the end. We want you to buy a house. The only person who wants to buy a house more than me for you is you, period. We want to make it work.
Yeah. Well, and just to kind of give a little story, just recently happened, somebody called me and they were buying a new build and they started out with one of those, veterans focused companies, doing a VA loan, and they're months into it. And then they're not hearing from me. There's no responsiveness. They're just not getting any communication whatsoever. And so they finally go to the builder and tell the builder what's going on. The builder's like, well, call our mortgage company. It's, one of the subsidiary companies. Yeah. So they sent him over an estimate. Looked like a good estimate. I looked at the numbers. I'm like, that's not a bad deal. Like, what's the issue? Like, well, we're just not sure. We're not hearing from him back, like we thought we would. And I said, all right, well, what do you got? Give me all your info. So they gave me all their application information. Didn't even get the documents, just got the application. Looked at the income figures, looked at the expenses. And, with a VA loan, we're not using a debt to income ratio, which is a normal thing for conventional loans. It's looking at a residual. But I'm looking at it like there's zero residual. We're like over 100% debt to income ratio. I'm like, I hate to be the person to tell you this. You've been through 2 people, but this is not going to work. Like, you need to go call this loan officer and ask him, hey, what's the residual income that you guys are expecting us to have? And do we meet it? And once they started making that phone call, crickets. Like never heard back from the guy again. And they're supposed to close, on a new build actually this week. So, now what we're doing is they do have another property and they've got two sons. So we're looking at the options of being able to pull some money out of a different property, put the sons on. We'll look at, I don't really want to, go down the path of a joint loan necessarily, but we're going to look at that and they're going to get some down payment if they do that, or maybe conventional works out better. So it's that creativity and experience trying to problem solve that, you or me, people like us, that this is all we do. We're not in a call center. We're not getting paid a salary to, take somebody's application and push papers off to the next person. That's such a big deal. On top of just the better deal that you get, you've got to have somebody that's experienced. Nothing against like somebody working in a call center, but you generally, I'm going to paint with a broad brush here. They're not as experienced, they're not as knowledgeable, and they're not as vested in your success, at the end of the day.
Agreed. I mean, again, nothing against them, but that's frankly the reality. If they're getting paid an hourly wage to push, make phone calls and push the numbers, that's what it is. And I think you hit the nail on the head. The advantage of dealing with people that have done this a bunch of times and done a bunch of loans is they can find creative solutions. Like, for you, joint loan could work, but that may be more money than they want to put down, where you could solve that on a conventional with a lot less down. So, it's all relative, and that's, and that's what people don't know. I mean, yes, I love VA loans. It's one of my favorite things in the world, but I did, last year I was 60% conventional. So I know those loans backwards and forwards, right? But that doesn't mean, but VA is my specialty when I deal with it. Conventional loans is, I mean, everyone does conventional loans, right? But VA is my baby. If you want to do like an investment loan, I'm not your guy. I got people on my team that'll do those. I know better. I mean, can I do them? Sure. Can I do them well? I'm sure I can, but it's not what I want to do. That's what I want my people to focus on, and I will work and do what I can. Cause my mission obviously, is not unlike, some of the people is if I can at least educate on the VA, that's what I care about.
Right. So if you had to pick one thing out as kind of a final thought here, that you feel like consumers just don't understand about real estate and mortgages, what's something that's important to enlighten them about?
Man, there's so many. I mean, I'll be honest with you. I think honestly what it comes down to me is do not sign with the first realtor you talk to unless they're the best in the world. And same thing with a lender. Always get a second opinion. So that, to me, I think you need a second opinion on both. Some people will automatically pick a realtor and then all of a sudden lender shop, when frankly the realtor is the problem, not the lender, right? And so I think do your research. I don't think there's anything wrong with these big websites. I mean, the values are terrible on Zillow, but they do provide a lot of good research stuff like Redfin as well. I do think that you should talk to multiple realtors to make sure you meld with them, and then talk to multiple lenders. You may call Brian and you like him better than me. That's fine. It is what it is. But I do think that, compare apples to apples and be open to conversations, and keep in mind that just because you got a number from somebody off on the internet doesn't mean the loan's going to be smooth. Read the reviews. I can't emphasize that enough, actually, is, all those things being said, dig into someone, look at them, read their reviews, see what other people have to say about them. You can't manufacture 5-star reviews at a high level, and a lot of them. So if you find someone that's got great reviews, read that, see why, and see if that's someone that resonates with you. And that's my biggest thing is, I tell people all the time, I was like, look, you may not buy into this. I was like, but I promise you, there's 6 people mentioned on this thread on Facebook, for example. I was like, I've done more VA loans in the last 3 months than they've all done the entire year combined. So if you're going to come to me, know that I'm the expert, right? You may not like what I have to tell you, but at least I know what I'm talking about.
Right.
And that's the biggest thing, is make sure you find someone that understands your situation and can help you move down that path. I love it. And, there's a final thought, but the final thought is I love it when my borrowers reach out to me about shit that has nothing to do with loans, because they know that I have a solution for I pay attention to what's going on in the world. I have a solution for them when it comes to their house or taxes or whatever that means. When you become essentially the mayor of your city, quote unquote, you have solutions for everything. Who's your accountant? Who's a good plumber? I get that all the time. I'm sure you do too. And that to me is that's as powerful as doing a loan for somebody, because they trust you enough to ask you your opinion about other things that are just as expensive, frankly, as the house in a lot of times.
Yeah. Well, I think that's key, a difference in what we do,
Yeah.
being local as opposed to working with somebody that's in a call center across the country at a bank or what have you. Is like we invest in our communities, we live there, we work there, we make those relationships. And when you need something, we're going to connect you with somebody that you can count on. That's a
Sure.
big part of what we do. We stay in touch with clients, year after year to provide that kind of service. You're not getting paid for a referral, but you're going to keep that person happy. You're going to take care of them when their time is right. They're going to come back to you or they're going to refer somebody else to you. That's why we do it. And I don't think you're going to necessarily call up your call center loan officer,
Yeah.
say, hey, I need a CPA. Like, who would you recommend?
Now, if you are a call center loan officer and you do a great job, I'm sure Brian and I would be happy to talk to you about that.
Yeah, we're always looking for good people, right?
Yeah, exactly. Because there's plenty of people that are great. I mean, y'all start somewhere. I mean, I've done plenty of jobs that I cut my teeth in. I mean, I started out and had no clue how to run the automated underwriting system 6 years ago, and here I am. So if I can figure it out, anybody can.
Yeah. Well, at the end of the day, it's about the people. Like it's either the people that we're serving or the people that we're bringing into an organization to be able to teach them and train them. Like if you've got good people can learn stuff. That's the bottom line. You just gotta have good people.
Exactly.
And speaking of that, you're a good person. I appreciate you joining me today and helping us educate. It's a topic that I think is important that we talk about with consumers and with realtors, all aspects of VA and everything else, because there's a lot of misunderstanding out there, and we got to make sure that we're serving our veteran community as good as we can. So thanks again for coming on.
All right, man. I appreciate you letting me come on.
My pleasure, you guys. Thank you very much for joining us on this latest episode of the Uncensored Real Estate Podcast. Make sure that you, again, go in there and subscribe and leave us a 5-star review, and then join us again next week for the next episode. Take care.
If you'd like to reach out to today's guest, Jimmy Hobson, you can reach him at 801-979-6365 or by email at jhobson, that's HOBSON, at UMortgage.com or online at jhhomeloans.com. Thanks for joining us, and please remember to subscribe, share, all that cool stuff that helps us grow, and come back next week to listen to our next episode. Until then, go out and live life uncensored.
Thanks for listening to the Uncensored Real Estate Podcast. Don't forget to help us out and subscribe. Follow and give us a 5-star rating on your favorite podcast platform. And check us out on YouTube for the full video podcast. If you want more information on any of the topics discussed on today's episode, email us at uncensoredrealestatepodcast@gmail.com or give the Cardenas Mortgage Team a call at 480-331-4684.